with LJ weekly housing market update slide. Okay, and let's get started with the interest rates. Our interest rates are coming down, and this is really good news for our real estate agents. And according to Freddie Mac, they're hovering around 6.35. Right? Obviously, we know this is for your top tier scenario for 6.35. When you look at the weekly 52-week range, we're definitely on the lower end. Right? Obviously, we want to see it even lower so more people can be motivated, but we are headed in the right direction. Right? So according to your Mortgage News Daily, they were very similar to Freddie Mac, and they're hovering around 6.40. And clients do usually ask us, hey, when we see these headlines, could I get those interest rates? And our answer is yes, possibly, depending on how much down payment you're going to put down. If your client is putting down 3.5% down payment, 5% down payment, they're not going to get this, right? If they're putting 20% down payment, they should be able to get it. But it's just not one factor. You need to have your credit scores. We're going to talk about credit scores a little bit later. They are super important when it comes to this. Is it going to be your primary residence or not? That's going to matter. So as a real estate agent, when you're having a conversation with your clients regarding interest rates, tell them, hey, your situation might be different from your cousin, your uncle. Doesn't matter, whoever bought a property in the last 6 months or 8 months. Go speak with the loan officer, see how much you qualify in today's market. Okay? But we are hovering around 6.40. So let's look at the change overall compared to 1 day, a week, a month, and a year, right? So 30-year fixed conforming loans, they are hovering around 6.40 today. That's a little bit lower than a day ago, but look at it about a year ago, 0.68%, right? It's coming down, and that's a good sign for us. We're mentioning inflation data and unemployment rate to you guys, so you guys can be educated on this stats. So when you're having a conversation with your client or another realtor out there, you should know more than them, right? That makes you stick out a little bit more professional. Inflation data, it's really important in housing market, and that is around 2.9%. The next reading we're going to get, right, it's going to be on September 11th. So if the inflation goes down, that's a really good sign, right? Because the target for the government or the Fed, it is 2%. We're headed in the right direction. Unemployment is going up, it's increasing. And the next reading we're going to have is in 2 days, right? And on September 6th. So right now, if the unemployment goes up, let's just say it goes to 4.4. It's a little bit higher than 4.3 right now. That is still another sign for the Fed to cut the rates. So when will the rates be cut? September 18th. That's when the next Fed meeting is going to happen. And hopefully we see it on the 17th or 18th of this month to see how much will they do a rate cut. Is it 25 basis points, right? Quarter of a percentage, or is it 50 basis points? Most of the economists out there, they're thinking that it's going to be around 25 basis points. If Fed is really feeling the heat, they might push to 50 basis points. Okay. Next, I want to show you affordability, how much it changed when the interest rates were 7.29 versus 6.29, right? This is a real example of our client here that's closing a deal soon with us. Annual income of $141,000. Down payment, they did not have much, right? They wanted to put down around $40,000. Their monthly debt was around $500. The interest rate they got was 6.29. The property that they found, the property taxes were $11,000. Okay, and the property insurance $1,500. So at 49% conventional loan that they got, they were purchasing a property around $700,000. They qualified for 719. Let's compare that to 7.29 rate, right? Does anybody wants to take a guess? If the interest rates were 6.29 and their purchasing power was 719, how much was it down when it was 7.29%? Do you guys think it was 650, 675, 700,000? Any guesses? If the interest rates were higher, which they were 2 months ago, right? if the interest rates are 6.29 today and they're qualifying for $719,000, how much do you think that they will qualify for when it was 7.29? The answer is 653, around $650,000. So same client that you had, they had no difference in their income, no difference in their down payment, monthly debt, everything is same, except for the interest rate. The interest rates dropped about 1%. Now the affordability went up. So maybe you're looking at a pre-qualification for 6 months ago. For a client that was 6 months ago, maybe their pre-approval says they qualified for 650. Now you're showing them a house, maybe at 675, 680. You need to talk to them and say, hey, I know you like this property, but I need you to go see a loan officer and see how much you qualify in today's market. And let them know the interests have dropped. I'm pretty sure they're aware of as well, but see what is the new pre-approval. And they'll be amazed if the price jumps up for them $66,000, right? So now their affordability increased. Maybe they were looking for 2 bedrooms. Now they're saying 3 bedrooms. Maybe they were looking in this particular area. Now they want to move to another area because of their affordability increased. You need to have that conversation with your clients. Hey, the interest rates are dropping. Let's see if you are ready to purchase a house in today's market. Okay. Overall, for housing market snapshot for the United States, active listings over 700,000, medium sold price around $400,000 there. There's plenty of new listings that's coming around $387,000. You guys can see majority of the properties that are coming in any area. It could be South Ocean Park, it could be in Nassau, it could be in Suffolk. The inventory is increasing a bit, right? But now the buyers, we're in September right now. The school started, so we have to understand that not everybody wants to be in contract right now, right? Not everybody wants to switch schools right now. So if you have a client that has family members, just understand the fact that maybe they do want to wait a few months. On the other hand, there might be some investors, some people who are single, not married yet, or does not have any kids, and they have no problem purchasing a house right now. And you have to leverage that. You know, you got to tell them, hey, there's less buyers right now because the interest rates are still dropping, but not every buyer is ready to purchase a house today. But if you are, let's make a solid offer and see if we can get you a property today. Okay. So you want to prepare your first-time home buyers. So some of them are scared to go see a loan officer. I had someone come in 2 days ago yesterday, and the person said, hey, you know, whatever lender I went to, they did a hard pull on my credit, right? And it hurt my credit. And I'm telling them, it's like, why are you authorizing it? Right? You have to be the judge. You're like, hey, I don't want to do any soft pulls. I don't want to do any hard pulls right now because I haven't found a house yet. So you have to tell them, go speak with the loan officer. You can bring them to LJ here, and we will not do a hard or soft pull at this stage. We just can look at their credit karma, credit scores, and just estimate what their credit scores look like, right? When the time comes, we would definitely need to do a hard pull or soft pull, but not in the initial stages. We don't want to damage your client's credit scores at this stage. So tell them first, review your finances, right? How many credit cards do you have? How much monthly debt do you physically have to pay every month, right? You want to increase your credit score as much as possible, which we're going to go over in a few. You want to look into a first-time homebuyer programs. You want to be the guide for them. You know, if someone is asking you, hey, do you have any first-time homebuyer programs, you should be able to guide them. There's a down payment assistant website that you can just fill out their information, how many people are living, what does their income look like, and see which programs they qualify for. And it's perfectly fine if LJ Mortgage cannot do their loan, right? They should be we want to think for our clients. Put their interest first, right? Come to us, compare the rates, compare the programs, but shop around and see whatever programs that's available for you, go with that. What is your best interest? And when you're looking for a lender, it shouldn't be just one. You need to shop with at least 2 or 3. And down payment programs, again, it will really depend on your situation. There should be plenty available. Okay, so now I want to take you guys a journey from a 500 credit scores to 800 credit scores. right? If someone is just starting out in life, they have no credit cards, no nothing right now. They're just starting out, right? They haven't built any, credit scores because they don't have any history right now. So they're gonna start off at very low, probably around 500. Okay, so we want to be, obviously we're starting below 500. Then our goal should be 580, then 670, 740, and 800. Will this happen overnight? Absolutely not. It will take some time, but you want to guide your clients. Okay. So when you're just starting out, let's say you got out of college, you're just starting out, maybe you want to apply for your first credit card. Do you think the credit limit is going to be $50,000, $15,000, $5,000? Most likely not. It might be a few $100s, right? Maybe the first card that you get from Chase Bank, TD Bank, Citibank, or Discover, they might give you a limit of $200, $300 because you don't have any records yet. So your credit scores might be 560, right? You're not ready to take in on your mortgage right now. Your goal should be 580. Even when you hit 580, you're still renting right now, right? You're just, maybe you're a year into this, you still have your credit scores below 600. So you still want to see if you qualify for a mortgage. For FHA, you will, but is it the best time to purchase right now with this credit scores? Probably not. Okay. Then you have 620. Now you have reached the minimum requirements for your conventional loans. But will you get the best interest rate? Probably not. When we mentioned 6.40, and if you have 620 credit scores, you're not going to get that. Okay. So if you want solid interest rates, pretty good interest rate, then you need to increase your credit scores. So let's say you go up to 650 now. Now you already qualify for a mortgage. Now you maybe need more line of credits to build your credit card or your credit history. Maybe you want to buy a new car, maybe a new appliances for your home. You're not buying a house anytime soon. You're just building your credit. So you want to purchase something where you're making your monthly payments on time. How about if you have a missed payment? Your credit scores is going to drop. It's going to be a negative effect on your credit history. Initially, in the beginning stages and everything, it's very critical that you don't miss any payments because that will stick on your credit report for quite some time. Okay. Then you have 670. 670, this is when you're really serious now. You should be start a budget plan, use your credit card for small purchases, and pay it off in full every month for 6 months. Right? That means you're making purchases on a credit card and you're making those payments full. Let's say you have a balance of $400 on that credit card. On the 31st, end of the month, you want to make a full payment on that. Okay? That will help you boost your credit scores. Next, your target is your 700. This is when you're requesting your current credit companies, let's say it's Discover Card, you call them up and say, hey, I've been with you guys for about a year now, and my credit limit is around $6,000. I would like to see if I can get that increased. And maybe they can increase that to $7,000 or $8,000, and that will have a benefit to you and increase your credit scores. Okay. Then we have your 720. When you're continuing to pay off your credit card in installments, but always more than the minimum payments. If you guys see your statements, if you're making minimum payments every month, you're not gonna pay off that balance anytime soon. Even the bank statement that you receive or the credit card statement that you received, it tells you in the snapshot on the first page, if you were to make just minimum payments, it might take you X amount of years to pay this off. It might be a small amount. So you don't want to just make minimum payments. You want to make sure that you pay a little bit extra. Next goal should be 725. Your credit score is looking pretty good right now. Now you want to consider applying for a mortgage. Okay. Next, at 730, you apply for a mortgage. You could lock in at a good rate and you can purchase a house. So we are 730 right now. At 740, now with you already purchased a house, now you're going to make that monthly payment that you have for your mortgage on time. Now, since you have a big loan, before we were talking about initially when you got out of college or your client just got out of college, they had credit scores of 500, 580, right below 600. Now they're above 740. they purchase the house, they're going to be making all the payments on time. And they're going to continue to build their credit scores, keep their credit utilization rate as low as possible, and have a good long payment history. And it's going to go from 790 to 800. So at 800, maybe they got married, and that can boost, and they have joint credit of lines that can help as well. So in the initial stages, let's say you have a family member who would like to add you to their credit card as an authorized user. That will help you increase your credit scores as well. Okay, so if your clients are looking to purchase a house, you want to tell them that, hey, for FHA, you need 580. These are the key points here. 580 for FHA, 620 for conventional, and 700 for non-QM loans. Non-QM loans, some of them are where we're not even checking their credit history. We're not checking their income. We are checking their credit scores. We need to make sure that their credit scores is above 700, because non-QM loans are more risky. But if you're going to just start off, 580 should be your bare minimum. Conventional has different portions. Bare minimum is 620, but if your credit scores is 720, you're going to get better terms and better rates. Okay, any questions on credit scores at all, guys? Comments, questions? Okay, just so remember, if you miss a big car payment or your mortgage payment, these points that we're talking about, they can drop up to 80 points, and that's a lot. So you want to make sure that everything's on auto pay, and tell your client, hey, you have a child or just a teen or someone getting out of college right now, and you want to help them out, add them to your current credit companies. Let's say you have a Discover card, add them as a user, and that will increase their credit scores. Okay, if you have a credit limit of $25,000, should you use all of that? If you use that, that's going to have a negative effect. So the credit companies, when they're giving you a credit, you should not be using the whole percentage. Keep it below 10%. And that's a really healthy rate. So this way, you're going to be building your credit scores in no time. Okay. All right, guys. Next is the top 6 don'ts for your first-time home buyer. So you're a real estate agent. You have plenty of first-time home buyers, and some of them are just not knowledgeable on some of these things. So you want to be that guide and telling them, maybe at your presentation, hey guys, these are top 6 things that I wouldn't do if you're trying to purchase a house in the next 3 months. Okay. So one is don't skip your mortgage rate shopping. Hey, I recommend LJ, you can go to them, but I also recommend you go to your own bank. Let's say you're banking with whoever, go to them, and if they do home mortgages, see what they have to offer. And then go see another person. Don't settle for your first mortgage offer. We gave you guys the stats before. Around 40 to 45% of the people who go to the first mortgage broker, they stick with them. And they don't shop around. And they could be missing out on this, right? Again, we want the clients to come to LJ Mortgage, but we want to see that, we want to clearly tell them, be transparent, that we are the best by showing them on a loan estimate. But how are they going to know that this is really good? By comparing it. We just can't say it. We have to show it on paper. So they should be going to at least 2 or 3 different people or loan officer and getting to see what loan options are available and what interest rates they may get. Okay. Next is that don't overextend your budget. Right? We just mentioned that your affordability went up when your interest rates came down. Right? Before you qualify for 650, now you may qualify for 700. But don't go over 700. Right? And not even hit 700. Try to keep your DTI, your debt to income ratio, a little bit lower. Sometimes you are showing a house and the property is a little bit over their budget, and the real estate agent might say, hey, let me see if I can get them this property. But that might be looking for a longer term trouble for them, where they cannot make the mortgage payment. And guess what? They're going to come back to you and say, hey, Lillian, you helped me. You told me that this was perfectly fine, and now I'm strained with my finances. So be the right guidance for your clients. Just let them know, hey, let's look at your budget. Let me talk to your loan officer and make sure you can get this property within your budget. Okay. And don't make any major financial changes before closing. Right? You're trying to buy a house, so don't change your job. That's going to jeopardize your mortgage. Don't make any large purchases, and don't open any new line of credits. Even if they get declined, you're going to have a negative effect on your credit report. And don't skip the reading for the fine print. How many times we look at a contract, we say, oh, where do I need to sign, without even reading it? So two people are really, really important in this transaction when it comes to fine print. Number one is your attorney, right? This is going to be the purchase agreement. You want to make sure that you understand everything on that. And you want to tell your client that. As a real estate agent, I always told my clients, like, hey, this is the time to ask questions. This is the time that you ask everything. Hey, how do I get my money back if I want to back out? How about if the seller wants to back out after 3 weeks? How do I get my money back, right? How about if the appraisal is lower than what is the offer price right here, right? We agreed on a couple of things to fix the roof, to fix the bathroom. And if those things are not fixed, how do I recoup that money? Right? All those questions, the attorney needs to answer those for your client. If you were to answer them and you give them a wrong information, you could be in some legal jeopardy there. So you want to make sure that purchase agreement, you have nothing to do with that. You are the one who's told them, the attorney, hey, here's the deal sheet. These are what we agreed on. But the attorneys are the one who's writing the contract, reading the contract, understanding the contract, and making sure your client understands it. Your job as a real estate agent is to make sure your company name, LJ Realty Team, is in the contract, right? As long as you have a copy of it, you can see it, you're good to go. And when it comes to the mortgage application, how many times we get a phone call on regular basis here in the office like, hey, somebody's offering me 4% in today's market, right? 4% interest rate in today's market. And we just feel like it's just not possible. Right? So there's some things that maybe, is that loan officer that they're working with, is that person really transparent? Were they really telling them all the details for this property or this application? Probably not. If the interest rates are hovering around 6.4 right now, how are they getting 4%? And some of these guys say, hey, I'm getting 5% on non-QM loans. So we tell them, hey, there's going to be a cost to that. You just don't know it right now. You're going to find out before the closing. So make sure they understand everything what the attorney says, and make sure you shop around with different loan officers so they know what they're dealing with. Okay? And don't neglect the future resale value, right? As real estate agents, what is our job? Our job is to find them a property where they can build some equity, right? When we say, hey, you got a really good deal, that means if I put in an offer for $500,000 and my bank appraisal came at $550,000, that means I already gave them a good deal, right? Because they're already benefiting $50,000 in profit or in equity from day one. Because the bank thinks that the property is valued at $550,000, our offer that got accepted is at $500,000. Okay? Then you want to consider, hey, what is the long-term value for this property? With this property here, the factors like, hey, quality of local schools, right? Property taxes, community growth can affect your property's resale value. So we know that anybody that's purchasing a house today, they don't want to sell it in the next year or two. It might take them maybe 5 years, 10 years, really depending on their situation. But just know that, hey, are you giving them a good deal, and will there be a future resale value for them? Okay. And last is, don't assume that you need to put down 20% down payment. First-time home buyers really need to know this. It's very basic. Every realtors know that out there now. But it's very basic that you actually have this conversation with them. Anytime you're talking to them, you're not a loan officer, you're a realtor, but you can have this conversation because these are facts. That they don't have to put down 20% to get a mortgage. If it's an FHA loan, that will allow them to put down 3.5%. If it's a conventional, they can put down 5%. There are some conventional loan programs that allows you to put 3% down payment. But most of the conventional will say, hey, at least 5%. Okay. All right, guys. Next, when your client asks you, hey, is this a seller's market or buyer's market? You have to ask them, which market is it? Which area are you looking into? So I'm going to give you 3 different examples here. If it's a Rego Park area here, that the score we got for this one is 41, which is a slight seller's advantage, right? The market is hot there, but it's not as hot as Fresh Meadows. Fresh Meadows, the score is 47. So it's a strong seller's market, but it's not as hot as East Meadow. East Meadow, the rate they got was 57, one of the highest one that we saw. It's definitely a strong seller's market. So when your client is asking you this, tell them, hey, which area are you looking into? If it's Ozone Park, is it Valley Stream? Is it East Meadow? Is it Fresh Meadows? It's gonna have different stats. So some of you guys ask me that, hey, how do I get these reports on my own? You guys can go to altos.com or just type in Altos on Google, ALTOS, and put in market report, and you will see the first link there. Okay. All right, guys. Next, we want to talk about foreclosures. But any questions, concerns? I know I'm going a little bit faster because there's a lot of slides here. But the point here is that you guys take away a few things that you can help out your clients. Okay. Next, talk about realtors that are working with investors, and we're looking at REO properties. Right? These are properties that are going under foreclosure. The main reason that these properties are going foreclosures is that the current owner is not able to make the payments, right? There could be a legitimate hardship, which people go through. It's, cycle of life. We all know this, that there's a lot of changes that come to our life, and we just don't have any control over that. So maybe, person purchased this property 5 years ago. They had no problem paying their mortgage first 5 years, and now they lost their job, right? And now it's been, they just can't get another job, or they have a disease, or they have something going on mentally, physically, and they are not able to work and they cannot make their payments. So have some sort of sympathy when you're looking into REOs. The people who are currently living in there are some bad actors out there, but majority of these guys that are going through foreclosure, nobody wants to, give up their house. Everybody that owns a house in today's market, they want to stick with that for a long time. But just have those feelings like, hey, this person must be going through something in order for them to go through a foreclosure, right? So how do you find these REO properties? So a few things. One is your county auctions, right? We have two of them. One is in Nassau County and one of them is in Queens County. Some of you guys are already going there, so big ups to you guys. And anybody that's new that wants to start going there, just make a habit of start going there. You need to find out the schedule, just message us and we can send you, let's say you want to go on Friday. You can just message us Thursday and we can give you a full list of those properties that's coming on the market for Friday. Okay. If you want to check online, you guys can do it on propertyshark.com, on propoffers.com, zoom.com, or auction.com. These are the top 4 websites to look at these REO properties, and you want to see what is available on them. Okay. How about MLS directly? You have access to this on your website. Even on your websites, if you look at any area, if you were to just type in Jamaica or Valley Stream or Freeport, you will see some of the properties will have a tagline on top. It says foreclosure. And look at the price, 3 bedrooms, 2 baths, 4,100 square feet in Valley Stream, and is listed for $425. Once this property is, investor takes over this property, renovates this property, the property value is going to be close to $650,000. Right? This is where you want to be part of this deal. It's a two-edged sword for this one. For this guy, for this investor, when you find them a property listed at $425, so other offers is going to come in. Maybe you guys want to put in an offer for $475 or maybe $500,000 even. That's a really aggressive offer, right? Now he puts in another $100,000 to renovate the place, so that's at $600,000. So bare minimum, we can sell it at $650. Maybe he wants to sell it for $699. After all the fees and all the expenses for him or her as an investor, they want to take away $50,000 to $60,000 at bare minimum. You can make that happen, and you can get 2 deals out of this. First, when they bought this property that was beat up, and now when it's fully renovated, they're selling it as a brand new property. Okay? Just know the fact that anytime you have this situation and your client is buying a property, renovating it, and then selling it again, and this all happens within 1 year, which majority of the properties do happen, the next buyer that's coming in, they need to do 2 appraisals. So it can't rely on just 1 appraisal. If you go through that, just make sure that there's going to be 2 appraisals that your lender will do or your client's lender will do on this situation. Majority of the time it's just 1 appraisal, but when it comes to foreclosures and property that had been sold within 1 year or flipped within 1 year, they would want to do 2 appraisals. Okay. So I don't want to take anybody to an auction and I'm not too sure if I'm going to get paid. I don't want to take someone there and next time they say, hey, I don't need to take Hassan with me. I'm going to just go by myself. I don't need Mr. Ali. I can go do it by myself, right? Why do I need them for? You want to make sure that you want to ensure that you get paid for your service by your exclusive buyer's agreement. Same way we said that this is going to be required for everybody as your buyers and everything. Same goes for investors. Hey, I'm going to find you a property within the next 3 months or 4 months, whatever you guys agree on. I need to charge you X amount. Somebody asked me, one of our agents asked me, hey, you mentioned a couple of times that, hey, we can charge only 2%. I said, no, it's not 2%. That is just an example. You can charge less, you can charge more. Every different client you can charge differently. Is all negotiable. There's no set price or percentages that you can charge. Okay? But you got to remember a couple of things when you're asking for something. If you were to ask someone for 6%, they're going to be like, are you crazy? 6%? I'm not going to pay you 6% just to represent me. How about 5%? That's still too high. Is it 4%? Right? 3%, 2%, maybe 1%. That's too low. You decide. Right? It's all negotiable. So you got to make sure that, hey, you get this signed before you take them to the auction. Okay. Okay. Any questions on auctions, guys? There's few agents of ours are getting it, building relationship with investors, going to the auctions. I encourage more and more of you guys to do the same thing. Okay. Next is that, guys, some of us are going under contract and then forgetting about it. And we're thinking that, hey, the loan officer and the attorney is going to take me to the closing. That is not true. Even if you're a buyer's agent, you should be pushing left and right and making sure that you can close this deal within 30 days. Right? So there are some things that you don't have any control over when it comes to maybe a lender's conditions, but you can follow up on it, right, on a regular basis to make sure that your loan officer or your client's loan officer understands the fact that, hey, Sclaren has been following up with me every Tuesday. He really wants to close this deal. So let me try to push this. I want to give you Paul's example. This guy, we love Paul. Paul, we love you. But at the same time, when you're following up with every one of us, some of us are like, oh my God, he really wants to close his deal today. And that's not going to happen, right? So we want to be in that field where we are pushing. It's like, hey, it took me so many properties or so many days, so many hours to show so many properties to this client. He finally put in maybe 2 or 3 different offers for different properties. It got rejected. I finally found you this property. And it took us such a long time. We're under contract. I want to make sure that I get paid within the next 30 days. So make a habit of following up with the attorneys. Don't be scared of these guys or don't be shy to follow up with them. You're the one, everybody's involved. You're the one where the real estate, the listing agent is happy because you found a buyer, where you bought in the buyer. You have the attorneys, they're happy because you bought in the buyer. And guess what? The loan officer is happy because they have a deal because of you. So you should be really following up with authority. Like, hey, I really want to follow up. I really want to see that if we can close this deal within 30 days. Okay. We never want to hear this. We did hear this, and that's why the reason I'm bringing this up, that, hey, our agent can start a deal but cannot finish it. Right? We never want to hear that. So let's say you are under contract and you don't know what the next step is. This is when you call us. Like, hey, I just went under contract. I don't know what's going to be the next step. We're going to be like, hey, did the attorney order the title report? Did the loan officer get started with the application yet or not? Right? If the application is in, when are we getting the commitment letter? If we got the commitment letter, how many conditions are on that loan? How long will it take for that loan officer to clear those conditions? There are some files that we deal with, they are super easy. They're very clean looking, meaning there's like maybe 5 or 6 conditions and we can get it cleared to close within 5 days. And we have done that. On the other hand, they might be 15 or 20 conditions and it might take us 45 days to close that deal because of, the buyers or the conditions itself. So you need to know those facts once you're under contract. Follow up with your attorney, follow up with your client's loan officer, and build relationship with them. Say, hey, if I'm getting this deal done quickly, guess what? I'm going to bring in the next one next month and we're going to do this all over again. Okay. So here's the timeline for you guys. So if you have a contract, your buyers is signing the contract yesterday. Let's say he signed it yesterday. Now that contract is with the seller's attorney, right? And now the sellers have to sign that contract. If they're taking longer than 2 days, I should be going in panic mode. Why was the contract sent out? Why the seller haven't signed yet? Right? I need to find out the reason. Are they waiting for another offer? Is the listing agent still hosting open houses? What is really going on? Right? If it's over 2 days, we should be in panic mode. And when your client is signing the contract, he's also putting in an earnest deposit. So that needs to be done on time right away. The mortgage application, once the seller and the buyer signed your contract, we call that fully executed contract. That contract is needed for the mortgage application. So if you go to a loan officer and say, hey, I signed the contract, I'm waiting for the seller to sign, could I get started with the mortgage application? They're going to say, no, we need the purchase agreement, which is your contract. And we want to do that within 5 days. If you have a fully executed contract, I would get it done within the next 24 to 48 hours, but maximum within 5 days. Okay. If you didn't complete any home inspection, that should be done right after the offer is accepted, within 1 day. That we need to get the inspection done so we don't have any issues. If there are issues, I want to put it in the contract or add it as a rider so we can clear those up before the closing. Okay. So we mentioned the commitment letter. When do we need it? Within 10 days. I need to have a copy of it. How about your title? Same exact thing. If it's the title report, within 10 days, I can get a commitment letter. So if the title report itself, if you had no mortgage and you have all cash deal, then all you need is a title. And that means you can close that particular deal because it's all cash. There's no mortgage involved. There's no loan officer. There's no conditions. Your client has all the money in his bank and he's going to close. But he just needs a clear title. So that should be done within 10 days. Okay. You're asking for the commitment letter from your loan officer within 10 days. You want that. How fast do we provide it? I don't want to brag, guys, but when we're working with UWM, sometimes we're doing the same day, 24 hours or maximum 48 hours. We're providing a commitment letter. And we have seen, other agents from other companies really surprised at that we can really get it done. So you want to tell your clients, like, hey, go to a mortgage broker that can really help you out. Okay. So you want to ensure all the lenders have provided all the closing documents before the closing, usually 5 days. The government requires it that they see 3 days prior. So let's say the loan officer has to provide a CD. This is your closing disclosure. And guys, just on a side note, we would need a copy of a CD for all the closings. Okay, we need to make sure how much you're getting paid. We need to make sure that what terms and loan options that this person got so we can have it on our file. Okay. You guys are scheduling a final walkthrough. If there's any issues on the final walkthrough, make a video, take photos, and make sure that you are getting some money back for your client, or at least holding some money in escrow so those things can be fixed for your client. Okay. All right, guys. So next, guys, I want to talk about the future that we have right now that's going on for the real estate market. Right? There's some agents who are simply scared that, hey, I don't know how to talk to the buyers. I really don't know what I have to offer. Right? So before you even speak to the client, you need to make sure that you really have a buyer's presentation that we're talking every week about. right? We really need to show our clients what we have to do, right? What does the process look like? The commission that we talked about, right? That, hey, I need 3%, I need 4%, I need 2%, I need 1%. God knows what you need. But you need to know that, hey, everything is going to be changing when it comes to the commissions. You might call a listing agent and say, hey, we're offering 1%. And you call another listing agent and they say, hey, we're offering 2%. Right? It's going to be all different. Or they're going to say, hey, we're offering 0%. Go get it from your buyers. So you need to have that conversation before that. Like, hey, Mr. Buyer, I need to get paid. If I were to get paid from the other side, I'm going to minus that from this agreement. Okay? So the commission models are changing. Your buyer presentation has to be top notch. You have to bring value to the client. Otherwise, nobody's going to sign your agreements. Okay? And you're going to build your relationships, right? You, as a real estate agent, you should be connecting with other loan officers, other real estate agents out there, and try to get your name out there. And some of you guys are not doing rentals, right? Some of you guys think that, hey, rental is a waste of time. I just can't get it done. But guess what? There are agents who are making a good living out of rentals, right? So you want to make sure that if you need to learn about different rental programs, vouchers, and everything, you got to just spend one full day and you can understand it, right? But you have to do the research. You can come to the office. You can do your own research and understand the concept of it. And the technology, guys. If someone is telling you that, hey, I need to buy a house in South Ozone Park and I'm looking for 2-family and my budget is around $900,000. If you don't send them the properties within the next 15 to 20 minutes, we're really missing out. We really want to have that wow factor with your clients. Like, hey, you told me you're looking for this area, right? In this area, these are the specs. Here's your alerts. They have the same alerts set up on their own property through Zillow, Realtor. We're competing with that. You guys have the right tools to actually work with them. But it really disappoints us when we're looking at the KV Core stats. When we look at the KV Core stats and I just simply put in, hey, how many users have not logged in to KV Core in the last 90 days, right? And when I see the report and I see the faces, it shows that, hey, the production that you guys have versus the logins to KV Core, it plays a huge role. We can clearly see, hey, this person haven't logged in last 90 days and they haven't closed the deal in last 90 days, right? So if the tools are there, if we don't use it, what's the point? Okay, so we have all the tools that you need to succeed here, guys. Trust me, I don't think there's anything missing except for your hustle, right? When it comes to KV Core, MLS Stratus, you have your transaction desk, your Microsoft Teams, all these things are there to communicate and make yourself look more professional. Okay? If you want to do comps, right? Some of you guys start sending us the address now, and we give you guys a really nice PDF file with all the comps. It really takes us a few minutes to do it. We have no problem doing it. So you should have different sources for comps. You have your RPR, you have your geodata, you have your MLS comps, and then you can send it to us like, hey, here's the address. I want to put in an offer, and I think that offer should be around $800,000. What do you guys think? And when we guys send you guys that PDF, you guys can clearly see that, hey, what the bank will be thinking appraising that value. Okay. All right, guys. Next, on a sad note here, there was a real estate agent who passed away. He actually committed suicide, and it was really sad news. I wanted to just show you guys. Sometimes we look at these people on Instagram, social media, and everything, and we really think that it's like, the life is so great for them, right? So like, perfect for them. But this guy, Brandon Miller, he only had $8,000 in their bank account when he passed away, and he was in $34 million in debt. So when we're looking at, these news here, it really says something. It's like, hey, when we look at Instagram, when we look at any social media, please don't judge them. We really don't know what's really going on. Maybe they're trying to show off in one way and they might be struggling in another way. Okay? Keep it simple. Keep it, even if you're making a good living, just keep it simple. You don't need to, lash out on social media. All right, guys. Next, we had this is the market that we're seeing right now. The interest rate came down about a percentage, and the activity hasn't increased yet, right? Activity for the home buying right now. A lot of them, we mentioned, one is the school. That plays a huge role. When it comes to this September time, October time, it plays a big role because majority of the parents don't want to move their kids. But overall, even if you're single and you're looking to purchase your first time purchasing a house, you're just waiting and seeing how the market is going to react. Some of these guys are actually going to wait until September 16th for or the 18th for the next Fed meeting, right? But you got to be with them. If you're still sending them properties on KV Core, knowing the fact that they're not ready right now, right? They're paying attention to that. That, hey, Lillian, you keep sending me properties. I know that maybe I told you that I'm not ready yet, but I am looking in that area. So keep sending me. I have no problem with that. If I do like something and it really my family likes it, I'll go put in an offer. But right now, I'm not that aggressive when it comes to offers. So you got to understand that some clients are on that page where they're just simply going to wait and see how the market reacts. Okay. Just have a conversation with them too that, hey, if the interest rate were to come down to 5.5, right? If they come down to 5.5, what do you think the price what is going to happen to the price? That's going to go up because there's going to be more people competing just like yourself. There's more people waiting just like yourself. Maybe they have waited since COVID. Some people have waited for last 1 year or 2 years. So you got to let them know, like, hey, I understand that you're not ready right now. I'm going to keep sending you properties from KV Core. It doesn't cost you anything except for your time. Okay. Next is, guys, kickbacks. There's some real estate agents out there, loan officers out there who say, hey, if you want my business, you need to pay me. That's illegal. So don't expect any kickbacks. There are 4 companies. There's 4 title insurance company that are found to be giving kickbacks to real estate agents for exchange for referrals. So if you give or take any kickbacks, anything of value, it doesn't have to be just the money amount. It could be someone giving you a phone, a watch, anything of value. That's going to be considered a kickback. For your referrals to from a loan officer, title company, attorneys, doesn't matter what it is. If you're going to be taking money for the services that you're not licensed for, that's illegal, and you will go through some legal issues with that. Okay? So just don't do it. Just play by the rules. Earn your commission. There's plenty of agents who are making a good living just doing the right thing, right? Just represent your buyers. Once you're doing the hard part of showing them. Once you're under contract, let the other parties follow up. You follow up with them. Earn your business. Earn your commission so you feel good. So you're a professional real estate agent, so you want to be just that. You don't have to worry about it. It's like, hey, I don't want to collect any amount of anything of value, $100, $500, anything for any reason. So if Mr. Hassan is a home inspector, and if I want to give him business for inspection, as I don't want any kickbacks. Like, hey, just treat my client right. Make sure that this person, you do the right thing for the home inspection. Doesn't mean that you say, hey, on the home inspection, everything is great. No, you are a licensed inspector, so you need to make sure that, hey, you provide them the right information. Same thing goes for your loan officer. There's so many loan officers that we know of that does so many things from outside our brokerage, but we don't want to be part of that, right? And once you have a habit of thinking this way, you can never make the wrong decision, guys. Okay. Next, guys, some of you guys are still calling or asking for cold calling. It's still not allowed in New York, right? This was most recent update that we received just a few days ago from NYSAR. So we want to make sure that if you want to call or if you want to market as mailers, you guys can see middle of the paragraph here. If you want to send out mailers, you want to do on social media ads, that is completely legal. You guys can do that. But just cold calling, purchasing a list and calling them, that is not legal. Okay? If you see a for sale sign, you can call them. and say, hey, I want to tour your property. I see it is for sale by owner. I want to tour your property. We have few agents who have received listings from for sale by owners, right? Because for sale by owners, people think that they can sell this property in no time. And then they realize, oh my God, I got to worry about this, this, and that. And then Mr. Ali comes in as a professional. Hey, let me get the job done for you, right? Those things we can do, but just calling, we cannot. Okay, guys, we have a few minutes left here. Next is your MLS fees, right? We will be sending out MLS dues to every one of you guys. You should have received an email from MLS, and you can log into MLS Stratus, and you can see even on Stratus here, you can click on pay my bill online. You're going to log in using the same Stratus account, or if you're on MLS Stratus, you can click on LI Realtor, and it will direct you to the same site. Once you're logged in, you want to click on menu and click on pay your LIBOR bill. Okay, so current bill is $596, so around $600 that it needs to be paid by September 30th, so by end of this month. So I'm pretty sure experienced agents, you guys have no problem, but brand new agents, guys, there's two fees that have a breakdown. One is your MLS LIBOR, which we were talking about. It happens every September, and it's for $596 right now. And then you have your second one that's going to come in January. That is your MLS one key fees, and that's going to be around $175. So collectively, your fees for the whole year is around $771. Okay. If you're a first time, you're brand new, you're signing up with MLS, they will charge you $200 extra as a startup fee. Okay. So guys, we are working with UWM, right? That's one of the companies that we use for our mortgages. And they have done a study recently where they're clearly showing that on borrowers can save on average of $10,000 over a life of a residential loan when they work with a broker compared to when they're working with a direct lender like Chase or TD Bank or Bank of America, Wells Fargo, any of those sorts, right? So we don't want to brag, but at the same time, we have options for you guys where we can close a deal much faster and we can get, save a lot of money for your borrowers. So we're indirectly telling you guys, bring them here. So this way they have an option to compare to the other banks. Okay. And one of the last things that we want to talk about, I just want to make sure that you guys are clearly understanding this, that if your borrower, right, or your buyer agreed to pay you 2% and the listing agent is offering you 1.5%, then you can only take 0.5% from your borrower or from your buyer. Right, we're mentioning this on every meeting, so we have a clear understanding of this. If you are agreeing to get paid 2% from your buyer and the listing agent is paying you 1.5%, then you only take 0.5% from your buyer. And if it's the reverse, if the buyer is paying you 1.5% and you call up a listing agent and the listing agent says, hey, yes, we're offering 2%, legally, you can only charge them 1.5 because that's what you agreed to get paid for your service, unless you do an amendment, okay, or a rider. So our co-brokerage agreements, not every listing agent is signing those. Rather, they're signing a confirmation of seller's agreement to pay buyer's broker, a long title for one form. But it clearly says what is the subject, who's the seller, who's the listing broker, who's the buyer, who's the buyer's broker. Okay? And this is the form that they will fill out. And this is the form that we use to create your commission invoice when the time comes. Okay? And you can get all these forms on ljagent.com. Right now, you do have to download them and then upload it in Transaction Desk. If you guys need any help, right, we already created videos of this, but if you need any help, you just come to me. You just need to spend 10-15 minutes, understand the concept, and then you can do a million times. But if you don't understand, if you don't spend those 10-15 minutes understanding the concept, you cannot do it every time, right? So the point here is that you understand these process, how it's going to work, where you get these forms, how you're going to fill them out, and how you're going to send it for e-signature, right? Your first option should be e-signature, right? Otherwise, if you don't have that, and you're going to say, hey, wet signatures is going to be hard for them to come to the office, meet you in person, just do e-sign. Okay? So tell your client when you're meeting them, hey, I understand that maybe you don't have enough funds to pay me. We can do a couple of things. One is that obviously if you have the funds, you pay me from your pocket and we make a little bit lower offer. We wanted to put in an offer for 500,000, let's put in an offer for 490. Or we can request the seller to pay. If he pays, then you don't have to pay me. Okay? Or let's ask for a seller's concession. Right, let's put it in the offer that, hey, instead of 500,000, let's put in an offer for 510, and we need $10,000 back as seller's concession. So there's different ways. So again, if you need any more explanation on this, you come to the office and we can review this together. This is what the reports look like when you guys send us an address. Like, hey, do me some comps. We can send you this PDF with all the details for the property and what the value we think or the bank thinks for that property. Okay. All right, guys. I want to give big congrats to Mr. Ali for closing 150th Street. Big congrats to Sheetal for closing 124th. And Mr. Daljit for 2nd Ave in New Hyde Park. Okay. All right, guys, that will do it from my end. I hope you all guys can succeed. You guys can actually use the tools that we have. You guys can educate your clients. You guys have a buyer's presentation ready that you guys can speak to your clients about, right? That's our main thing, guys. We have to show, before showing, we need the agreement signed. Okay? Questions, concerns, guys? Okay, for next meetings, for next Thursday, if you guys want to put in any, any topics for me to go over, some of these topics are from our agents. Just shoot me a message and we'll take it from there. Otherwise, thank you so much for joining, guys. You guys take care.
Thank you.
You're welcome.
Take care, Lucky.
Take care, guys.